Hedge funds were caught off guard by a sharp surge in stocks last week. That is the week of 30th of January to 3rd of February 2023, to exit losing bets on falling markets at the fastest pace in years. Equity markets have risen sharply this year, 2023, led by many of the speculative stocks that were clobbered hardest during 2022's global sell-off. Many of the funds that profited from the rout have found themselves poorly positioned by a rebound, which has recently accelerated as investors sensed that interest rates were close to peaking in many large economies. The resulting flurry of short covering, that is when investors buy back stocks they had been betting against to limit their losses, was the largest since November of 2015, according to Goldman Sachs' note written to its clients seen by the Financial Times. The scale of hedge fund buying, which helped fuel a 3.3% jump in the Nasdaq on Thursday, the 2nd of February 2023, eclipsed that seen in January of 2021, when retail investors coordinating their actions on forums such as Reddit sent the price of GameStop and other meme stocks rocketing, inflicting huge losses on some hedge funds. Funds closed their bets primarily against US stocks, but also against European companies. Bets against stocks that had previously been falling for a long period were under max pressure, according to Goldman Sachs. That is, according to a note they wrote to their clients. Okay, and they went on to note that they saw an explosive move higher in software stocks, driven by consistent hedge fund covers, that is short covering all session. Okay, the bank estimated that on the session of the 2nd of February, that is Thursday, the 2nd of February, that quantitative hedge funds lost about 1.3% that day, their worst day in more than 6 months. Among stocks that have stronger hedge funds this year is online retailer Carvana, which fell 98% last year, 2022, but is up 200% in 2023. Short interest, a measure of the size of bets against the stock, was at 30% or so for Thursday, the 2nd of February, according to S&P Global Market Intelligence, compared with less than 5% a year ago, when shares were far higher. Short interest in AMC, whose shares have fallen 76% since last year, but have risen 49% this year, is running at 29%, only slightly less than it was at the start of the year. The rally in stocks that were hard hit last year has likely provided a big technical tailwind for the non-profitable tech universe, and has been hurting the hedge fund systematic community, according to Goldman Sachs. It is hard to fight the risk-on momentum, according to an analyst at Natixis. The market remains focused and reassured by the near end of the interest rates tightening cycle. Retail meme stocks are performing strongly. On Wednesday, the 1st of February 2023, the US Federal Reserve raised interest rates by a quarter of a percentage point, a smaller move than its series of large increases last year. However, strong jobs data on Friday, the 3rd of February, revived their fears that the Fed may have to keep interest rates higher to control inflation. So hedge funds rushed to unwind short bets, exit scramble triggered by surge in stocks hammered in last year's global sell-off. So hedge funds have been running for cover, and a lot of stocks that were heavily shorted, including Carvana and other ones, and CarMax probably, AMC as well. They've all rallied in since this year, 2023, going by all that we're seeing. So see what you make of all of these, and thank you very much for watching this video.